Hey guys, today is Wednesday. Yeah, quick trade breakdown. Trading today on paper trading, but yeah, today was really important. Once again, proving myself that my strategy is definitely profitable and that I'm only the problem. So myself, my psychology, still, yeah, definitely learning something every day. There are still some lessons I take away basically every single day. There are still some challenges I have to overcome to definitely get to the next level, and that's definitely overtrading and being impatient, and also trading if I don't really know what is going on. So today's day or trading day was really clean. So as you know, today we have actually high impact in the afternoon, but yeah, still really clean trading day. Nothing really to say about it. So let's first break the track down, and then we yeah, go into the executions. So trading on paper trading, that's why you can see the execution marks from later trades as well. So that's today's trading day. Yeah, really complex right there, uh, because yeah, we have this huge new week opening gap right there, trading inside yesterday's trading range. So looks like a really difficult day, but if we drop lower, it definitely becomes clear that today is actually a quite clean day. So what we have is new open kill zone, sense liquidity down here, also Asia lows. We scrapped new open kill zone buy liquidity, and also still London highs are intact. What I want to basically also talk about is the fact that we took out Asia lows still yesterday. So yeah, previous Asia lows. So kind of we had this retracement higher, and now we are already trading lower, and in that case we actually don't really know where we are drawing to. So I have to admit, from this place, I think there's not really a clean objective to have, because you could say that this retracement is way too shallow, that we're going to expand higher to sweep London highs and going to eventually trade back to, for example, CE of this price move to the downside. Something like that could be definitely possible. It could also be possible that we completely dumped to the downside, sweep yesterday's low, and trade back to the new week opening gap. But what really is important for my trading approach, as you know, is regular trading hours, and that tells us once again the whole story today. Really important. So what I'm referring to is obviously the huge new open range gap right here, where we also created, so from Monday, where we also created the huge new week opening gap, 60, 100 handles. And as you can see right here, we yesterday closed below CE, already indicating in that case that we are going to even trade lower soon, or I don't know when, but that we will even try to completely close in this huge gap. We also have the close right there, so that's also quite important to us. And also CE right here. Why? Because basically we traded to the downside through it. We opened up right there, so we had no buy side delivery in here, so we closed, we traded through it, and then we had now basically also opened up at CE right there. So that's also kind of why you could expect that we see this huge retracement higher, because it's back to CE. So we have a downside delivery and buy side delivery right there, and now we can expand even lower. But yeah, so basically now back to more importantly the 5-minute chart. And that is really clean. So today we had a new open range gap of also over 120 handles, so 220 handles. We are in trending conditions, and as you know, I want to see that we respect either the upper quadrant level or CE, and that we then, if we respect those quadrants levels, basically see either a continuation to the upside, or we basically trade a market maker sell model, or I don't know, a short towards those levels. This can also be the case, but as you see today, we disrespected those quadrant levels. So we closed below the upper quadrant level, and more importantly, clearly closed below CE. And that's already indicating that we are definitely going to have a bearish bias, that we want to see that we expect that NQ is going to close in today's Snoop range gap, and that's what we see right here. We traded almost back to it. We trade perfectly back to the wick of Monday's Newton range gap, and from there now saw this upside delivery, and eventually after the short-term run stops, after we saw this now the buy side delivery back to CE, we eventually can even trade lower, but yeah, in that case we already got our nice short. But I think we actually do have a quite clean market maker sell model being in play right here, because we have this really clean busy above the high right here, and then we saw basically, yeah, that we used the inversion for a gap and traded lower. So really clean so far. But so now back to my trades I took. Right here. So obviously, yeah, I took really this clean market maker sell model to the downside. Was really clean delivery, low resistance. If we would have seen the delivery we saw yesterday, then I would definitely have not blown my account. But yeah, I mean, no excuses for that. I had definitely a chance. I took so many trades yesterday, but definitely that's what I wanted to see. That's why I had so many troubles yesterday to finally see this move to the downside, because as you see today we have really low resistance to the downside. Look at the bodies. We completely respect the fair gap right here, and the wicks the wicks of the bodies only wick into the inversion fair gap. So we see no yeah, body closes above the inversion fair gap. For example, yesterday it was completely more difficult, because basically, yeah, I went short in here, also added right here, and so my position traded lower, and then I had my stop, I think, above the low of the breaker right here, bearish breaker, and got stopped right there. And I got completely confused by the bodies which closed above the fair gap right there, because as you see, the wicks right here, the body staying below the fair gap, that's low resistance. If we can expand from that lower, that's perfect. That's what we're going to see. But no, yesterday we had really high resistance, and therefore basically saw also body staying above the fair gap right there. And yeah, you have to expect something like that always, especially yeah, yesterday was still a no news day. But that's something to keep in mind. So yeah, that's also what I wanted to talk about. So low resistance versus high resistance conditions, and we want to trade low resistance conditions. So back to the trades I took. My first trade was short already right here. It was base of the fair gap right there, and I got stopped right there. And once again, yes, in that case, it is already correct, because we're trading aligned with regular trading hours. We already closed below CE, and to me, it's obvious that we are going to trade lower towards York Open Kill Zone, says liquidity, towards C of the high time frame gap, towards Asia liquidity, in order to close in today's open range gap. What you have to keep in mind is that we did not saw any manipulation so far. So this trade right here is completely wrong, unfortunately, regarding our yeah, electronic trading hours, lower time frame chart. We definitely saw manipulation. I mean, we took out this buy liquidity right here and trade lower, but it doesn't count if our opening basically opens up later, so after it, because with 9:30 opening up right here, we only trade lower, and that's the direction we want to trade. So right here we are basically buying low resistance fair gaps. We are shorting low resistance fair gaps. We are basically yeah, chasing prices lower, and that's what we do not want to do. We want to see first manipulation. We want to see that we trade to the upside, and then we want to take shorts. So in that case, I already expected that we would trade lower from taking out the highs right there, the engineered says buy the liquidity, because with that we trade into the 5 minute right here. And that's why I kind of got a bit confused by this huge body, this huge up close body, which was really aggressive to the upside, I have to admit. That kind of tricked me, and I also went long right there and expected, okay, maybe we are trading towards London highs, but that's really the really important mistake I made or make, also regarding trading my funded, because I had a clear objective in play, and that's basically based on regular trading hours that we are trading towards look open kill zone, sell liquidity that we're going to close in today's open range gap. To completely shift your bias and chase price right there is not ideal. I mean, such a continuation trade can work, yes, because we have a really aggressive balanced price range right there. But in that case, everything, so regular trading hours, has also be aligned with that, and also the higher time frame. Only then, really buying right there is permissible. In that case, it's just chasing price, especially if we take a look on the 50-minute chart. We see this huge wick, this huge imbalance, inefficiency to the downside, and then we know a body will follow. It's really important. As I saw the huge wick on the 50-minute chart, I knew, okay, that's never going to work out. Got stopped already right there and also went short. And yeah, that was then a perfect trade. Also added right there, added also right there. So 4 contracts short. Took my first part, so my first partial of below the engineered sales liquidity right here. Then 1 partial, I think, at CE or New Open Kill Zone sales liquidity. I don't really know. I think even CE, so right above CE, and therefore the middle of both executions is what you can see right there at the execution mark. Then took another partial right there and basically closed my position right there after I missed the perfect wick exit right there, which is, as I showed you before in the execution, or not before, maybe you will see it after. I don't know if I put which video I put first. But yeah, that's where we trade perfectly back to CE. And if we are this close to our new open range gap closer, we don't need to aim for this completely close in. I mean, in that case, that's completely enough, and the wick of the huge new open range gap is really important, especially if we regard the 50-minute right there. So yeah, kind of obvious that we're going to react from that. So that would have been definitely your perfect execution, but I'm so content with the trade. So definitely the first short is completely avoidable. I mean, the long probably also completely avoidable. Yeah, it is, because it's not against, it's not aligned with regular trading hours. Even if it kind of makes sense, because you also could admit that we have a regular trading, so a market maker sell model, market maker buy model, and ES already did not sweep New Open Kill Zone actually. So yeah, okay, it's not really that well because we had no sales liquidity sweep. But yeah, so once again, both trades before completely avoidable, and that's the trade you want to take. You want to wait for your 10 AM macro. So just a perfect delivery, and once again proving to myself that my strategy, that my approach, my trading approach is definitely profitable. I know what I want to look for, even if it's for the most, I think, a bit uncommon how I trade. Still, it's definitely also based on ICT. So I think regular trading hours is a bit unusual to take such a strong, I don't know how to call it, to emphasis regular trading hours so much. I don't know if you can say that, but it's just that I know what I want to look for. It's just the psychology with a eval account and a funded account, especially with a funded account, is really difficult, and therefore I tend to not trade at my best, but I will definitely get there. And I think also so yesterday was really sad that I obviously have blown my funded account, but now I think I should basically regard it in a different perspective. So I've really come close to a payout. That's also what you keep in mind. I'm always getting closer to this payout. I had 9 winning days with passing this eval. And then also my funded, I had already 2 winning days. So I think I definitely can get there, and I'm definitely getting closer to my first payout. It's just that definitely, blowing an account definitely feels like a step back, but it's actually not. It's just a result that you are still not there where you want to be. It's basically a sign that you still have to keep on improving, and that's what I'm doing. I know that I have to take fewer trades. I know that I have to wait for the right time, and I know that I have to wait for the manipulation if I want to take continuation trades, especially which are aligned with our opening direction. And I definitely know that I do not want to trade if I don't know what's going on. So I think that was also what yesterday was kind of the problem, why I took so many longs, even if I knew regular trading hours was calling out a bearish bias. I still took longs because in the back of my mind I thought, um, what if someone, my mentor or someone else, takes this trade? Or I saw the possibility that someone could take this trade, but that's not how I want to trade. Even if it's a really good setup, if it doesn't make sense to me, then I don't trade it. Everyone has their own system, and that's really important to keep in mind. So maybe a trade which I take doesn't make sense for you, but that's okay. A trade you take probably doesn't make sense to me as well. And therefore, we really have to separate ourselves from always looking at others and thinking, oh, what if they take those trades? What if I miss out? There is no missing out in trading. So we don't have really like working hours. That's completely different. You don't have to chase money, you chase probability. And that's what we have to keep in mind. And that's really, I think, well said in that case by myself. And now look at that guys. Really like how we now trade to the downside and try to close in today's range gap. Really clean market maker salmon in here as well. Wow. Wow, wow, wow. Look at that. With that, we closed in today's range gap. Completely clean. And so that would have been also really clean market maker sell model. And I mean, I have so much fun trading. I don't know. I trade for 2.5 years. I'm still unprofitable, but I definitely see the progress I made. And I think um, I'm definitely closer to making it than I think. Um, I think you're also always way um, way more apart than you think from making it, but it's also the other way around, I guess. Um, so yeah, hope you enjoyed the breakdown. Hope you got my strategy. Hope I explained it well. If not, if you do not understand it, doesn't really matter. It's always like those videos are most of the time only for myself. So yeah, hope you enjoyed it and safe trading.